Hello guys, welcome to my YouTube channel. So today in this video we're going to do a pre-market analysis on gold, so that we can know what we're expecting this week on gold. So our work this week is to be disciplined, to react when we are supposed to react without hesitation, and to follow our plan to the core. So we're going to first look for a bias. So we are going to start from the 12 months time frame. You can see that the 12 months time frame is strongly bullish. Our current year's candle is bullish. On the 6 months time frame, the candle is also bullish. On the 3 months time frame, you can see that the candle is also bullish. On the 3 months time frame, you can see that this month's candle has been retracing back to the nearest area of liquidity, which was this hidden liquidity right here. We can see that price came back, retraced 50% of that, rebalanced 50% of that single area liquidity, which is a hidden liquidity, and also it gathers sufficient liquidity below this candle liquidity low. Okay, if you do not know about the candle liquidity, you can look at the videos which I did post earlier, and you'll get a better understanding of candle liquidity. So after price clearing the low of that candle liquidity, we can see that it rebalanced 50% of that area. On the weekly time frame, we also had a double area. We had this first area here, and we also have this area here, right here. Let me refine it like this. We can see that the first area price came back, entered the 50% of that area, but did not have sufficient liquidity to take out the high. So it traded above this high here, acted as a deviator to push price down to the next area of liquidity, so that it can gather sufficient liquidity to come and take out the high. And seeing the current geopolitical situation that we are in, there's this thing that we call we say that gold is a safe haven when we're having wars, when we're having crisis. Okay, a minute. So when you're having crisis, gold tends to be a safe haven, and so a lot of people do buy gold, so that because on that time it becomes bullish. Okay, when markets are in panic, when there's financial crisis, when there's war, when there's recession fears, money flows into gold, and XAUUSD, which is gold, it rises. Okay, so the current geopolitical events have had a lot of traders being liquidated when they are looking for buys, and when you understand about liquidity, you're going to know why. When you understand about liquidity, you're going to understand why a lot of traders have been liquidated buying gold during this war that is happening right now. So let's put that on the side. So on the weekly, you've already come up with our bias. On the weekly. We have seen that the last week candle did a huge rejection, indicating that there is strong buying momentum, and the price is also rejecting lower prices. We can go now to the specific liquidation or time frames and look for structures, that you are going to use. So on the daily time frame, when you come to the daily time frame and look at the nature of the candles that we are having right here, on the daily time frame, you can see that I want to look at the nature of these candles. So we can see that the candle of Friday did try to break the high of Wednesday, but it lacked sufficient liquidity to do so. but we want to see today's candle close above so that it can confirm that we are bullish, and then we are going to wait for price to come back and clear this candle liquidity to gather sufficient liquidity to continue going up. Okay, so, and there's also, I've not used this high here because, or this open close, I've not used it because a bearish candle can never print a high, and a bullish candle can never print a low. So we can see that price, this was the last bullish candle here. Price came, tried, you can also see on the line chart, you can see that price came, tried to break that high, lacked sufficient liquidity, closed below. The next candle opened, traded the balance, then is going up. But I'm waiting to see price to drop below this candle so that we can look for buy opportunities. But on the specific liquidation time frames, we are supposed to look for a clear structure. Is it a pure single area? Is it a double area? Is it an impure level that we are looking for? So we have to look for a clear structure. So on the 4 hours time frame, we can see that we had that bearish PA. This was our last swing point. We had price break below, we had price shift, that retraced, we have something like this. So we look at the market structure that we are having, the price action that we are having, we can see that price has already moved from being bearish to being bullish. So we had this break of structure right here, and we had this shift. Okay, we had that shift indicating that we are no longer bearish, that now we are bullish. So let us mark our, let me do the annotations right here. So that's a break of structure 1, that's a break of structure, so that's our shift, that's 2, 3, break of structure. So we can see that price broke structure, shifted, and then we have another break of structure. So this one was our second liquidation. So the first liquidation right here has already happened, the second liquidation. So now we are looking for longs, long-term longs. But when you come to the 4 hours time frame and look at it deeper, on deeper level, we can see that we have this area right here. Did price retest at least 50% of that area? No, making these swing points a liquidity. So this week I'm also going to be very careful, because price can also opt to come back to this level and then we go up. Because how do we define liquidity? Liquidity is the relationship between buyers and sellers who are given a fixed price. We can see that buyers were aggressive, but sellers never retest 50%. So that means that there's inefficiency on this level. There's a lot of liquidity on this level, and we expect sellers to come back and gather sufficient liquidity. We expect sellers to come back and feel that inefficiency so that we can continue going up. So my work this week is going to be to react when price aligns with time. Yeah, I'm going to trade during the kill zones and wait for the right PAs for us to react accordingly. So if you're looking for long-term buys, you can consider waiting for those long-term buys here. But if you are a day trader, you can also take advantage of the price actions inside here. The price actions inside there, we can see that we also, like this single area, we had this single area here. This is something that we would have taken advantage of. Yeah, so My work this week is going to be reacting when price aligns with time. Yeah, I'll be more of reacting during the New York session, and I hope everything is going to be fine this week. So without much ado, I'm going to close that video there, because on the specific liquidation time frame, we've already seen our structure, the structure that we are anticipating. Yes, and our work is going to be being patient to wait for the correct move so that we can react. So if you are new to the channel, consider subscribing, liking the video, and sharing, and see you on the next one.